Tyler Hauser with Union Home Mortgage, coming with my Friday mortgage update. First, let's take a look at the shirt. I own. Let's set aside all the financial benefits of homeownership for a second, and let's just talk about the pride and the stability that our family gets when we say we own our homes rather than rent. What I want to talk to you guys about today is appraisal gap coverage. If you're already pre-approved and you're out searching for a home, you may already know what this is, but if you don't, then you should be contacting me immediately. Now, this video is for buyers, but I want you to put yourself into the seller's shoes for a second. After all, it is a seller's market. Okay, as the seller, you have a home on the market, it's in a highly desirable area, and you have 10 offers on your home, and they're all over list price. How do you decide on which one to go with? It's not simply just who offers the highest amount, because at the end of the day, there's going to be appraisal contingencies in these offers. What that means is that if the appraisal comes in lower than the purchase price, the buyer has the ability to renegotiate the purchase price with you or walk away from the deal and not buy the home. As the seller, you're likely going to make your decision based on who has the highest appraisal gap coverage in their offer. Appraisal gap coverage is the buyer's promise to the seller that if the appraisal comes in low, they're going to pay above that appraised value up to a certain limit, not to exceed the sales price. What's this mean for sellers? It means that it's a guarantee that even if the appraisal comes in low, they're still going to get the money that they were expecting because the buyer made that promise and that guarantee to them. So what's it mean for buyers? It means that it's going to be a change in structure to your deal at that time when the appraisal comes in low and you're paying the appraisal gap, because we're going to restructure it. It could mean more money out of pocket. We could change things around so you still have the same amount of money out of pocket. It could mean an introduction of PMI into your deal. It could mean a multitude of things. It could also mean having a much lower monthly payment because your loan amount's so much lower now. If you're shopping in a highly desirable neighborhood, chances are you're going to need an appraisal gap strategy to have a chance at winning an offer. So if you're working with a lender that hasn't talked to you about this or doesn't understand it, you need to come to me directly and I'll be there to help you. And as an agent, you should be knowing that the lender is verifying the assets to actually cover the appraisal gap in the first place, and that they're having accurate conversations with the buyer about best case and worst case scenarios when using this strategy. If you come to me, that'll be a heavily involved conversation that I'll be there with. I'll verify the assets. And then on every offer that we make, we'll discuss what the appraisal gap means for the client. And then I have a bunch of strategies on the back end that can make the cash out of pocket not as burdensome, and it can make the monthly payment even better. Tyler Hauser with Union Home Mortgage. Have a great weekend. Let me know if you're ready to get the homeownership journey started.